Good morning, Canada. Welcome back to BT on this Thursday. My name is Sid Cixero. Canadians have been hit with multiple interest rate hikes in the last few months. The latest one happened yesterday and has put a large burden on many people and their financial budgets. Here to help you navigate through this constantly changing market is personal finance expert, friend of the show, Bruce Sellery. Bruce, good day.
Hello.
Good to see you. All right, so let's get to a bunch of people have questions. We have a few here. I'm just going to throw them out there, and please help if you can. Let's get right into it. And it's great to see you again, Bruce. Question one, I am on a variable rate mortgage, and these hikes have increased my monthly payments to $1,000 or more. Should I lock in right now?
Probably not. But the first thing you should do is call your lender and find out what all your options are. So the pro of locking in right now is some certainty, which is just what's so upsetting for people who didn't plan for this. Like, what's going to happen next? The con is, if we move into a recession, there is a scenario in which the Bank of Canada is going to bring rates back down. You'd then be locked in at fixed. And circumstantially, if you need to break your mortgage, it is way, way more expensive to break a fixed rate mortgage than a variable rate mortgage.
Interesting. One I was contemplating as well without getting into the details. Question two, I have investments in RRSPs as well as shares. Should I pull from these resources to pay more towards my huge mortgage payments right now?
Probably not. I say probably not because effectively you're stealing from your future self. If you're pulling out of your retirement savings, what are you going to have for money to put groceries in your fridge when you're older?
Good point.
The other thing is the tax implications, right? That then becomes income immediately. There's a withholding tax. You're not going to get that dollar for dollar if you pull that out. It also doesn't address the fundamental issue, which is this is the new normal. These are the level that rates are at. So if you pull out 12 grand from your RRSP to account for a year, that's great. You've bought some time. What happens in year 2, year 3, year 4? You're likely in that mortgage for a decade, maybe 2 decades. And if rates stay at this level, you haven't addressed it. So you're better to take a pause and figure out how you can address the fundamental disconnect here in terms of income and expenses.
Okay, Bruce, final question. We got about 45 seconds. Should I consider selling my home in this market?
It depends on where you live. In all likelihood, that would be, if not the last resort, then the closest to last resort for 2 reasons. Number one, house prices are nowhere near where they were at their peak. So depending on when you bought, you might be in for a haircut. 2, it doesn't necessarily solve your problem of where you're going to live. Because if you sell that house, will you be able to buy something much cheaper? Will you be able to find a rental? There's a lot of uncertainty. I think there's a ton of things to learn and know. If you are finding that you cannot make your payments and you've got some consumer debt in there as well, be sure to call a nonprofit credit counselor. Credit Canada is one. There are a number in this country, but they can take a breath, look at your full financial picture, all your assets, all your liabilities, what's going on income and expenses, and help you find a way that is going to be a proper way forward that's sustainable and that will help you sleep at night. This is an issue that is not of people's own making. And if you're young and don't remember where rates were prior to 2008, back in the 80s, this feels like an incredible shock.
Bruce Sellery, personal finance expert. Bruce, great stuff as always. Appreciate you. We'll talk again soon. Take care.
Okay.
Good stuff, especially in this climate.